Okay, wait, question. Do I have to have that cash in the bank?
We're not like, here's the stamp, boom, you're approved, like you're done, like just
Okay.
sign the papers and buy the house. Like it's really not that.
But it appreciated.
Right.
And that's the beauty of real estate. Welcome back to Sky's the Limit Podcast. We're your hosts, Mike and Ryan. And today, after much anticipated feedback, we want to talk about how to buy a house 101. So this can apply to condos, single family houses, or multifamily. We'll leave commercial out of it for the sake of this episode. But a lot of the feedback from our listeners and producers is that, we talk a lot about how to invest, but really break it down from, nuts and bolts to what banks to use, how to find a bank, where do you start in the whole buying process, whether that's, the lender first, agent first. Let's talk about contracts. But yeah, let's talk about house buying 101. Like I said, a lot of listeners and our producers were still curious, like, where do you start? So kind of impromptu, we pulled Ashley from Capture the Concept, also amazing producer, on to the show. Welcome, Ashley. I know you're always behind the scenes, but good to have you front camera. So
yeah, it's cool to be in front of the lights. I'm not used to being on the side of the camera.
You are generally interested in like how to buy a house 101. Where do you start? So this is completely unscripted. We had something prepared, totally going off the cusp here, and just pepper us with questions that you think a lot of the other listeners would like to hear and learn. We have some like talking points, but yeah, let's dig into it.
Okay. So I think generally what a lot of the listeners have been commenting on your episodes is like what is the first thing that I do? Like the first thing. I'm like, I want to buy a house. I want to invest. I need to obtain a piece of property for whatever the reason is. Where do I start?
So let's pretend that you're currently renting and you're like, okay, I'm ready to buy my single family house. What do I do? So in my opinion, the first thing to do is you can do one of two things. You can find a realtor first, or you can find a lender first. In my opinion, it's probably easier to find a realtor because then the realtor can recommend a lender. So where do you find a realtor? The best place to start is probably ask family and friends for a referral, or you can go on Facebook, make a post on Facebook, or there's plenty of Facebook groups you can make a post in. So I think the first step is to find a realtor.
Okay, I have a question on that.
Okay, go ahead.
How do I vet my realtor? Like, what if it's just somebody that I found in my local chamber or a BNI?
So it really comes down to your personal preference. Obviously, I would hope they have some sort of referrals. So I think maybe the best thing is to ask friends and family for referrals for a realtor, because if it's someone you trust that's recommending this realtor they've had a good experience with, that's probably a good place to start.
Okay.
So, but questions to ask the realtor are, if you're very unfamiliar with everything, could be, how familiar are you with the area that I'm looking to invest? You can get granular into how many houses have you sold in this area, or how many buyers have you repped in the area? I mean, what do you think, Ryan?
Yeah, no, I think it's really important for like an agent, which is different than what maybe a lender would need to be an expert on, but like the area is huge. I think they need to know the area, like
hyper
the back of
localized.
hyper localized is super important.
Okay, so find a realtor that is experienced in the area that I want to purchase.
Yeah, like today's like social media is crazy. I use it all of the time. I would put a post out and be like, hey, who do you recommend in Hartford, Connecticut for an agent for a single family house? You're gonna get blown up. But what I really like to do is like if you get like 25 responses, and like 7 of them are the same guy or girl, call them.
Okay.
Yeah.
Go off of that. And then maybe you get 4 of the same responses for somebody else. Like work off those 2.
Because there's a dime a dozen realtors, let's be honest. Just like there are contractors, it's very low barrier to entry to get into the industry, and not all are created equal. So I think it really is important to work with the right one, tailored to your needs. So if you're buying a multifamily or commercial property, I would implore you to like look for an investment focused realtor that has experience with multifamily and commercial, because at the end of the day, I think, in my opinion, coming from being a realtor that does both single family, commercial, multi, do it all, any commercial realtor can really help a single a single family house buyer or an investment special realtor can help a single family house buyer, condo house buyer. The process is the same and it's just less intricate. But I would argue that if you're looking to buy a commercial property or multifamily, you really want to find a realtor who has experience with that. So I think commercial and multifamily realtors can help you out in the single family condo arena, but I don't think it goes the other way around. So
I agree.
Okay.
I think you should vet them accordingly.
The best
Got
thing
it.
about being a buyer is you don't have to pay the agent.
Yeah,
right?
that's a pretty big
huge.
misconception.
I remember you covering that on an
Yes.
episode, and I
Yeah.
was like, "Oh, who knew?"
Yep.
So
Yeah.
So
stinks
pick the
for
best.
you, but
Pick the best one.
So-
They're all going to cost the same.
Yep.
For
Step
you.
1, find a realtor.
okay,
Step 2, you need to get pre-approved. So you need to find a lender.
okay. What the heck is a lender compared to a bank? Like, I would just assume I go to a bank and get a mortgage.
I'll let Ryan handle that.
Yeah, that's a really good
Lender
question.
Ryan,
It's a good
tell me.
question.
Lender
It's a good
Ryan.
question. It's a good question. So there's a difference. I think for me, a lender is like sort of an all-encompassing thing. It could be a bank. It could be a broker, which I'll explain. It could just you're called a lender. Like I think it covers all of those things. A bank to me is going to be like a Bank of America, like a TD Bank.
Okay.
Like
People's.
People's Bank, like a brick and mortar place, or sometimes they're just like like I have Ally Bank. They're no brick and mortar. They're just like an online bank, but they do mortgages. So like that to me is a bank. A lender could be a bank or a broker. A broker is somebody that could go out and shop for you, right?
Okay.
Like they're not captive to like Bank of America loans, right?
Yep.
Like they could go out and shop a brick and mortar place like that, but they could also go shop ABC Mortgages, which just happens to be like an online shop,
Okay.
that does lending. Like so, there's a difference there. So you have lenders, I think is all encompassing. Then you have brokers, which can shop for you. And then you have a bank, which is like a brick and mortar shop. I think the most important thing that I could tell you is that, and this happened to me, I think you want to go small.
Like
What
local
do you mean
credit
by that?
union.
Correct.
Yes.
Oh, okay.
You want to go local. Like, do not call. I don't know. Can we name drop places?
Sure.
Okay. Don't call Rocket Mortgage. Don't call them. Like, I don't understand how they do so much business, but they are terrible. And if you call them once, they are going to blow up your phone till the end of time. Don't do it. I even made
Find a real person to help you through the lending process.
Yep.
And this,
Okay.
the best way is to find your realtor first, which is relatively easy. I'd say it's easier to find a realtor than a lender, but a realtor can recommend a really good couple lenders that they've worked with in the
sure.
past. That's the best way because at the end of the day, you want to get that loan closed.
Right.
So have a referral from a realtor most likely, or friends and family for a realtor from a lender.
I'll never forget my first house that I was buying. I was working with Wells Fargo, big bank, right? And so like we're going through the process, whatever. And I'm like, where are these people? Like, are we good? Like, are we moving forward? Like, what's the story? So I asked my agent. She's like, I haven't heard anything. So I called up the guy that I was working with at Wells Fargo, and he's like, oh, let me take a look. Oh, you've been denied. I'm like, were you going to tell me? Like, because I didn't know that. They don't care.
And
Like
here-
you're just a number, but at like a local credit union or with a guy that comes as a referral or a gal, you're going to be treated differently.
Okay. So,
For sure.
So you are a lender, but you're not lending me your money. Like, do you work for a bank that you write like stuff for? Like, are you one of those people that are in like the fancy offices of like the credit union and the bank? Like, that's like, is that what a lender is?
We work through a bank, but we
Okay.
are not a bank.
And you're
But
not sitting in a bank.
You could go walk into Chelsea Groton Bank and speak to a loan officer there.
Correct.
You could
Right,
go do
I've
that
heard
at
of them.
Bank of America. You could go do that at People's. There are brick and mortar banks that you can meet and physically handshake a person who's going to get you through that loan process.
Okay.
If you are not that kind of person where you'd rather just sit behind your computer and do it via email and a couple phone calls, you don't have to go in. Don't feel like you have to like walk into a bank, sit down, hold hands and all that stuff. You
Right.
don't have to do that.
Okay.
But one thing to keep in mind, I think this is really important. I've experienced this while representing clients when buying homes that they've already had their preferred lender. I recommend a few, no problem. You go with yours. One thing I can tell you is I tell people to ask, is that lender or brick and mortar loan officer, are they commission based or are they salaried? because there's a huge motivation difference. Plenty of brick and mortar lender, Chelsea Grotten's, Bank of America's lenders, they make the same amount of money whether they close 10 loans or 100 loans. And they're decentivized to get the loan closed. So if there's an appraisal dispute or anything that comes up in the loan process, they're like, like you, probably Wells Fargo. They're probably all salary-based employees.
Likely.
Right.
Versus someone like Ryan who's a mortgage broker and a lender, or and a million other different types of companies are commission based. So they're only making money if the deal closes. They will do everything in their power to get you to the finish line because they're not making any money. Just like an agent.
Just like
I'm gonna
any
do
other
everything I
commission.
can
Right.
to help you get that closed because I'm incentivized.
Right.
It's a
So
really good
keep
point.
that in mind
Okay.
when you're shopping around for loan officers or originators.
Okay, so if I don't want to go to a big old bank or a credit union that I drive by all the time, or my corporate company uses this credit union,
Yeah.
then I would go through my realtor to find.
Correct. Ask for a couple
A lender.
referrals.
And they
Got
might
it.
refer a bank or they might refer like a broker, and that broker can shop around for you.
Cool.
Yes.
Got it.
So you got your realtor now.
Yep.
And now you got your lender. Now the next step is to get pre-approved from that lender you choose.
For whatever size house I could afford. Or
You're going to say, they're going to ask you some questions, and I'm sure Ryan can get into it, but they're going to say, they're going to ask you a lot of personal financial questions, and then they're going to gather that information and say, okay, you want to buy a single family house in this area, great. You're pre-approved to be able to buy up to a $500,000 house based on your income or you and your spouse's income if you're both going into it together.
Okay.
That's important they're going to ask that question.
Sure.
So doesn't mean you have to buy something that high, and maybe you don't want to be strapped, but they have their formulas where they say, okay, based on your debt to income ratio, you can afford this.
Okay.
Okay. And then you tell your realtor that.
Okay.
I can afford up to a $500,000 house. I really feel comfortable at $350,000 based on what my mortgage payment's going to be, which
Sure.
the lender will tell you.
Okay.
If you buy a $500,000 house and you put X amount down, given the taxes in that area, this is probably what you're going to expect to pay. And you're like, I can do that or I can't do that. Very simple. You tell your realtor, and then they're going to set you up on what's called the MLS. This is where all listings originate.
Okay.
So anytime anyone's browsing on Realtor, Trulia, Zillow, Redfin, all of those houses come from the MLS.
Okay.
So you are going to get set up on there. It's free. The realtor will do that, and he'll set your criteria. So let's use Connecticut since we're here. Let's say you want to buy a house in Hartford County. He'll set you up for Hartford County single family houses within $250,000 to $500,000. You're going to get an email every morning or as soon as possible when a house in your budget and criteria comes to the market. You're going to get first look at it, and it's your job to reach back out to the agent to say, hey, I really like this house, this house, this house. Is there any notes on it that I don't see myself? Or is there anything I should know about it that I'm missing? And you're gonna have that discussion with him, and they're say, okay, great, it looks good on paper, let's go check it out. And he will set up a showing for you to go see it. A lot of times there's open houses, which you don't need to be accompanied by a realtor to go see.
Oh,
you
I
can
didn't
go
know
by
that.
yourself.
Walk right in.
No.
Anytime.
way.
That's why a lot of realtors have open houses, is because they get usually sign in, and a lot of people unrepresented will go to an open house that they're just browsing, they're just window shopping, right? But they're not already working with a realtor, so the realtor hosting that open house is going to get your name and contact, and they're going to contact you.
Oh,
So
okay.
one of the questions is that a realtor running the open house is, are you working with an agent? No? Okay, great. Let me show you around.
Right.
So
Right. Okay.
Have we
Didn't know that.
lost you yet?
Nope. No. So backstory, my husband and I, Joe, Joe, other half
the
of
amazing
the pro-
producer.
when we bought our house, we weren't married yet. So he bought the house under his name. I was in charge of the MLS. So that part I understand.
Got it.
I found the house, but he had to do all of the financial stuff. So I wasn't, obviously I knew what was going on, but I didn't have to really listen much because it wasn't my money. So it didn't matter. But that's interesting to know. So now I have a question though. That's for home buying, right? If I want to invest, is it the same kind of like if I'm still just looking for a property in this dollar amount because I want to get a 2-family or a 3-family or, what you guys talk about on the podcast, is that something that would be the same process? I would just tell my lender.
It's going to be very similar.
Okay.
I mean, it's going to be different, likely like a different application, or it could be like the application. You could even like people could even do this like without even talking to a lender yet. Like you can literally go online, type in 1003 application. It's like the uniform. It's a uniform standard application that everybody uses for
1003.
Yeah,
I've never heard of that.
Yeah, for home buying. Like I send it out all the time.
Okay.
Fill it out to the best of your ability. Like you could literally just have it on hand so that when you talk to a lender, it's like, here you go, already done. And they can just, because it's going to have your income, it's going to have like whether you rent or own right now, like what your debts are, all this stuff. On the investing side, I use a different application, or I can use a different application depending on what the circumstances are. But that, for all intents and purposes, is a good place to start.
Okay.
But to answer your question, yes, it's the exact same process. Realtor, lender, MLS, start house shopping. And you get pre-approved in that process as well. So you're going to get pre-approved, and they're going to ask you different questions if you're going to live. Let's say you buy a multifamily, you're going to live in one of those units, and Ryan can get into this. You're actually going to be pre-approved for more because they're going to count 75% of the rental income towards your income. So let's just say you're looking to buy a 4-family house. I'm going to take one of the units, and I'm going to have the other 3 units rented out. Well, now other 3 units are rented out for $1,000, $1,000, $1,000. That's $3,000 a month. Ryan is going to now count 75% of $3,000 toward, as if you make that.
Right.
Even if obviously you don't make that in your job, but it's going to help you afford that house.
More firepower for your income. It's pretty cool.
That is really cool. Okay. Good to know.
So that's not the case if you're buying a single family house because there's no other income besides you to support that.
Just money out the door.
It's money out the door. So that's that's a little
it's a
different.
liability.
But as far as the process, you still need to find a realtor, still need to find a lender, you still need to get pre-approved.
So the pre-approval, I'm going to tell you what I assume it's for and tell me if I'm right. Pre-approval means the bank is approving you for the X amount of dollars that you plan to spend so that when you get to, okay, time to sign for your house that you found, you're not going to be denied then after all the work.
No, I would say no.
Oh, okay.
Yeah, the pre-approval is like, it was a rough estimate of what you can afford. We're not like, here's the stamp, boom. Like you're approved, like you're done, like just sign the papers and buy the house. Like it's really not that.
Oh, so you could get to closing and.
Because let's just talk about like that application I was just saying, the 1003 app, like you're going to fill out your income. You're going to fill out some of your debts, like where you live now. Do you own, rent? But like we haven't crossed that like tax return bridge. Like I need to collect tax return docs the last 2 years. I need to collect W-2s the last 2 years. Like most recent pay stubs. Like I need to like dig into your stuff. And like I will give you a pre-approval document that says you're approved for $400,000 house well before I collect those.
Okay.
Yeah. So no, it's definitely not that. It's a very, very good gauge, and you want to do it because you don't want to waste the agent's time or your time, like shopping at houses that are too expensive.
Right.
But it's not like you're definitely going to do that because there could be something in your tax return that's like, whoa, like, yeah, you didn't list this on the old application here, so like this isn't going to work.
I could see it's important to be super honest when initially starting the process. Otherwise, you're just going to waste your own time.
It'll bite you in the ass if you're not.
Yeah,
for sure.
Okay, got it.
So
okay, all right. So now I know I'm pre-approved. I'm on the MLS. I'm casually going to see houses that I like. I'm sending them, I assume, to my realtor saying, hey, I like these ones. Can we go see them? I schedule some days of like go to see all the houses. I find one.
Awesome.
Now what? Because right now, I know just from the current market, it's you like have to pay a lot of money extra, right? Like sometimes. That seems to be what it's like. When we were buying our house in 2015, that wasn't the case at all. Right? It was like, oh, how much lower under what they're asking can I try to get this for? So what do I do if I'm like, no, this is my house and no one's going to take it from me?
So this is why working with a really experienced and good realtor will make a huge difference because they can help guide you through that process. If you love the house and you have to have the house, There's a lot of different ways you can write your offer on a contract, which they will do. You
Okay.
don't have to do that. But they should be able to guide you through different tactics and negotiating strategies to make that offer the most appealing above everyone else. So, examples. When you write an offer on a contract, there's kind of two fail safes. As you know, let's say you find a house for $500,000 and you love it. You have to have it. So in addition to going over the asking price to whatever you're comfortable with and whatever you're pre-approved with, you are also going to have to decide if you want a home inspection. So let's say you get your offer accepted at $520,000. You now have to get a home inspection. This is a time where you hire a third-party company. It's not your realtor. It's not your lender. It's not your friend Joe or your husband or anyone. It's a third-party company. And they are going to come in and do a typical home inspection. I can break down what goes on in a home inspection if you want, but you get a home inspection.
Okay.
This is your time to potentially back out of the deal and get your deposit back. So once you get an offer accepted, you have to give what's called an earnest money deposit, EMD. And this is typically 1 to 2% of the purchase price. So if you're buying a $500,000 house, your deposit is going to be maybe $5,000 to $10,000.
Okay, wait, question. Do I have to have that cash in the bank?
Yes.
Yes.
Okay.
You
That's
need to,
important
as
to
soon
know.
as you get your offer accept, technically, and I'm not an attorney, but technically, an offer isn't considered fully executed until you render a deposit and it's accepted. So just because the buyer and seller have signed the agreed contract,
Yeah.
it's not fully executed until a deposit has been accepted by the seller.
Okay.
It's same for leasing. We just went through this.
Oh,
Literally
we did.
just went through this.
Oh, we did. Yep.
So
So
Okay.
you need to send that check ASAP.
you need to send that. It's usually within 24 to 48 hours.
Because someone can kind of swoop in under me if their check gets there
The
first.
seller would have
potentially.
no obligation to, if you didn't make your deposit, they could accept another offer.
Okay.
So super important to get the deposit in.
So have the money in the bank,
Yeah.
ready to put down.
Yes. You need to have liquid cash.
Got it.
Not in stocks and bonds, like in your checking account.
Okay.
So you made your deposit. Congratulations. Now the house is officially, you're under contract to buy it. No one else can take it from you right now.
Okay.
Step one.
Good.
So now you get your home inspection. And going back to your question, like, what do I have to do in my contract to make it mine? So you have the option to get that home inspection. You could waive that inspection. So if I'm buying your house, if Ryan and I are two bidders buying your house, put it in, you're the seller, and I offer you $500,000 and I'm having an inspection and you know I could back out.
Yeah.
And Ryan offers you $500,000 and he waived his inspection. We're going right to the appraisal.
Which one's
Which one are
stronger?
you going to take?
Okay, fine, sure. Obviously, I'm going to take Ryan's, but we were taught all growing up that you need to get everything checked, like, because you don't want to get now stuck with a house that's a hot mess in the back end, like, of it. So, or the foundation's crumbling, or whatever, all the things that you can't see that the
But how
inspector's
bad
gonna
do you
find.
want that house?
I mean, I don't want to regret it
Does it
down the
look
road.
nice? I mean,
You
listen,
can make
no.
any house look nice.
The inspector can't see behind the walls, remember. They
Yeah.
can only see the same stuff that you can kind of see. I mean, obviously they're an expert, but if it's a hot market and there's other
I
bids,
mean, this is like a new,
You have to
a new
consider
build
it.
house, and like everything's new,
Yeah.
and you know, foundation isn't from early 1800s. Like, chances are, it's clean.
Right, I guess it's situational
And it's
then.
you. I mean, both your realtor and you can make an educated guess. You're like, I really like this house. I'm willing to waive my inspection altogether to really increase your chances. You could also do waive your appraisal. It's probably the more aggressive thing to do than
Way
waiving.
more aggressive.
Yeah, way more aggressive. But in this market, there are plenty of people waiving their inspections and waiving their appraisals. Meaning, if you buy a $500,000 house and it only appraises at $450,000, you're on the hook
For
to
the
kick in the
difference.
extra $50,000 to get it to $500,000. Because Ryan's only going to lend you now $450,000.
yeah.
You have a contract for $500,000.
Okay,
So you must really, really want that house in order to pay the difference.
got it.
So those are two fail safes when making an offer. Well, those are two things you can get rid of altogether to really make your offer strong.
But you could do an inspection for due diligence only too. You
could.
could split hedge your bets. You could do the inspection, but it's not going to affect the underlying contract. Meaning, like, you can't use the findings to reduce the price or to back out.
You
Correct.
can,
Right.
I mean, you you can ask for whatever you want. The seller's just going to say, no, you're as is. Go kick sand.
Okay,
Right,
so
go pound sand.
Right.
So when people get, whether it's an inspection or an appraisal, what part of it is it when they're like, oh, the paint's chipping on the garage doors? You guys mentioned that one time. Or the railing is really loose and it's unsafe. Those things need to be fixed or take money off. What part of the process
The
is that?
inspection.
Definitely.
You have your offer accepted, you've made your deposit, and now you hired that third-party company to go find all these things wrong. That's their job, to find things wrong with the house.
And you pay for them, I
You
assume.
do. So for a single-family house, depending on, it's all based on square footage, but it's generally going to be between like $5,000 and $1,000 for a home inspector.
Okay.
And you pay them directly out of your pocket. In today's money, it's not part of any closing costs.
Got it.
So-
okay, so if I'm waiving my inspection, I'm saying if there's anything wrong, I will fix it
Pretty much. Yeah.
later.
Yep.
Once I have the house.
Absolutely.
Okay, so let's go back to appraisal because I was a little confused by that. So if I waive my appraisal, but the house is worth more, I have to come up with more? Go back to that whole situation.
in this example, if you signed a contract to buy a house for $500,000,
Yeah.
that is what the seller expects to get. The seller doesn't.
Seller
If you've
expects-
if you've waived your appraisal, it doesn't matter, right? Like if it comes back at 450, you're coming up with that difference between 450 and 500.
Right, because lender is not going to give me 500. You're only going to give me the 450.
I care about what the property's worth, what the appraiser has told me. I don't care necessarily what the contract says.
So if I waive my appraisal, then you're assuming that the house is worth the 500.
We hope.
And that's what you give me.
But this is why there's a mortgage contingency. So you have an inspection
Okay.
contingency and a mortgage contingency in any contract. If you waive your appraisal, you're basically waiving your mortgage contingency, meaning that
Okay.
did I lose you?
Nope. A lot of terms. Go ahead. We'll
So-
put them on the screen.
Yeah. So if the house, let's say you did not waive your appraisal
Okay.
and the house did not appraise, you did not waive you have it under contract for 500,000. You did not waive your mortgage, which most people don't. I'd say 95% of people do not waive their mortgage contingency.
That's super ballsy.
It is supposed to, yeah. You better have some cash.
Yeah.
Okay.
And it doesn't appraise. It appraised at 450. You're like, oh, shoot. Now you have every right to back out of that deal and get that earnest money deposit back. That 5,000 to 10,000 you put down
Yeah.
and is not in jeopardy anymore.
Because
You
the
can back
house is
out.
not worth what you have agreed to pay for it.
Okay.
So that's huge.
Yeah.
So you have two fail safes. An inspection, if something goes wrong, chipping paint, you don't like it, back out, you get your deposit back.
Okay.
You waive that, you don't get it back. Mortgage contingency, the appraisal, they're all the same thing. If it doesn't appraise, then you can back out and get your deposit back. The house isn't worth what the bank's not willing to lend you. I know you got pre-approved early, but they're not willing to lend you you're not willing to give you the loan because the house didn't appraise anymore. But you're like, oh, I still really want the house. Like, can the seller come down in price? So this is what a realtor does and helps negotiate that. Many times, now the house has been off the market. This whole process is roughly 30 to 40 days.
Okay.
For time, from the day you got your offer accepted to the day this appraisal came in, it's probably around 30 days now, roughly speaking.
Okay.
So that's been off the market for 30 days. There's been no other showings. The
Right.
seller, he's thinking we're ready to go. We're closing next week. So there's a $50,000 gap now, right? You're like, I don't have $50,000. I love the house. I wish I had it. I don't have it.
Right.
So you either need to come down to my 450 price and lower the sale price from 5 down to 450, or maybe I can kick in a little extra. I'm still getting $50,000 less, but maybe I can kick in an extra 5 or 10 grand. So I'm paying 455 or 460 for this house. Like, can we meet in the middle somewhere? Right.
And that's your job.
That's the realtor's job.
You also want to be super, super careful about overbidding on a house.
Okay.
Like, let's just take your example. Like, let's just say there was multiple bids on this $500,000 house. It was listed for $500,000 online, and you're like 520, and you get the deal. You got to be careful because I'm just saying, a lot of times when you get the appraisal, it just so happens to be what it was listed for and not the contract. So I'm doing a loan right now for someone where they're buying a property it was listed for 600. He agreed to pay 630, and the appraisal came back 600, not 630. So there's a $30,000 gap. Him and his agent were able to negotiate the loan or the price back down to 600, which is what it was actually worth.
Okay.
Because me as a lender, it's like 630, like don't care because it's not worth that. I'm giving you 600.
Okay.
The seller could easily be like, okay, I don't care about that because we agreed to 630. So like there's a gap there. So you just have to be careful about overbidding because a lot of the times it might not be worth that higher bid.
You have to prepare to cover that overbid.
If you really, really like the house.
Right. And I guess there is a difference between the lender wanting to know what you can afford, but also what the house is worth are the two pieces that allow you to even get a mortgage.
That's why they send out an appraiser, because the bank's not in the job of valuing property. It's the appraiser's job to do that. And the appraiser then sends that report to the bank, who then gives it to you, lets you know the news. It's like, hey, good news, that came in, it appraised at what you're paying. Congratulations, we can move towards closing now. Or sorry, it came in low. Like, go figure it out. Pretty much. Like, this is where we're at. We're willing to lend this. Take it or leave it.
So another option, just so you know, just because you get the appraisal back and it came in low, that's not necessarily the end all be all, right? Like you can go back and dispute it. And
We just did it for our client this week.
Yep,
Real life example.
Yeah.
3-family in Norwich. Just quick interject here. 3-family in Norwich. You did the loan. You're doing the loan. What is it?
So 285 purchase.
That's what the contract price is.
Yep.
He's under contract to buy this 3-family house for 285.
We needed the ARV, which is the after repair value,
Okay.
to be 375. So basically what was going to happen was he was going to buy it for 285. He was going to put 20 into it, and we needed to see what it was going to be worth at the end of the day. That's what this appraisal was going to say.
Okay.
We needed it to be 375 in order for all the numbers to work out. It came back at 358. Yeah, so there's a $17,000 difference, which means that our mutual client was going to have to fork over another like $12,000. That's just how the numbers played out.
Okay.
So we took that time in the last week or so to put a dispute together. We listed 3 other properties that supported the 375 ARV as opposed to the lower 358. So we submitted that. We heard back a couple of days later that the appraiser moved it from 358 to 369. So we got another 11,000, still short of the 375, but it drastically cut down like that $12,000 that he had to bring.
It's huge. That's
Yeah.
massive.
Now, and that's up to you guys as lender,
In
realtor to
We
take care
went
of.
back out into the market and said, thank you for putting this appraisal report together. I'm seeing what comparables, other houses that are like this that have sold, but you miss these other houses that are really going to help support our sale. So go look at these now. So you dispute that. It doesn't cost any money.
Okay.
It doesn't cost any money.
No.
Yeah. And she's like, or he was like, okay, I see where you're coming from. I'll increase the appraisal to XYZ amount, thus lowering the out-of-pocket cost for your buyer.
Got it.
Yeah.
Okay.
Does that make sense?
Yeah. Definitely.
So I think it's also important to note, it appraised, you got the house, you're through inspections, you close the property now. What do you need to do now as far as transferring over utilities now that you're the new owner of this property, right?
Wait, I have a question.
Okay.
So so far, I have only, because I'm thinking about like if I were to go buy a house as someone who's clearly new into this world, like maybe probably young, only rented, I only have so much money in the bank. So I've only put up 5,000 to 10,000 of my own personal cash, and then for the deposit, and then if I were to do my inspection, I paid the $500 to $1,000 there cash.
Right.
That's the only money that's come out of my pocket so far.
So far.
Ryan says no.
So far.
Okay.
So far, you're right.
So far. And then you're going to give me my money later to cover my mortgage. But what's next for what I have to cover?
So
I'm now closed.
the usual upfront costs that are not included at closing, which is basically kind of like what you're going to bring to the table when you meet with your attorney, are the inspection, which we talked about, and the appraisal.
Okay.
So the appraisal is an upfront cost. You need to pay for that, like in order to get the appraisal done.
And that costs what, generally?
It varies.
$800 to
Inspections,
$1,000.
Yeah, depends
So I
on the
could just
house.
figure
and all that,
another
but-
$2,000 for inspection and appraisal. It could be
It's a
under
good. That's a good rule of thumb. Yeah.
Okay. So
Yep.
5 to 10 for deposit based on my
And that deposit goes towards your down payment. So keep in mind when you're buying a $500,000 house, let's just use 20% down. The lender, or let's say you have 20% to put down. The lender's like, yeah, put 20% down.
Yep.
Then that's $100,000.
Correct.
So you're going to put 10,000 of that 100 towards the deposit. So now you owe $90,000 left to close this house. The lender's going to give you $400,000, but you need to put down 100. You've already put down 10 in your deposit.
Got it.
So now to get to close to own the house now, you need to put down the extra 90.
Got it.
So that's your whole
so
down
that's
payment.
more money, like liquid.
That's your down payment.
Liquid money.
Yeah, you need to have that in your checking account.
Got it.
You'll get pre-approved. Like you'll know that day one.
I'm
Right.
really glad you asked this. It's extremely important. So let's just take this example. $500,000 house, 20% down. Your earnest money deposit in this example
Say
is
10.
$10,000, which is 2%.
Okay.
Right. So you earnest money deposit day one, give your 10 grand. We know that you need to put 20% down total, which is 100.
Yep.
So 100 minus 10 is 90. You're probably thinking that's all you need, but it's definitely not because
Okay.
you have closing costs.
Okay.
Closing costs, closing costs, closing costs.
I hear all about these, and then like sometimes it's rolled in, and sometimes it's not, and there's other things that are rolling around. I don't know.
Generally speaking, budget to pay them, it's going to be completely dependent on a few different factors. Price of the house, taxes in the town, insurance. There's a lot of like prepaid stuff.
Okay.
Right. So like, it kills me when people ask me like, can you just tell me exactly how much I have no idea. Like
Got
I
it.
can't, like your attorney that you need to find, which should be one of the people that you need,
Realtor,
will
lender.
put together all those numbers. But please bear in mind, it's not just your down payment that you need. Liquid.
Okay. So let's go over what the other costs could be.
So you need an attorney to do the closing for you.
Okay. So I've closed. Well,
But you're at the
supposedly.
closing table
Yeah.
and he's going to show you what's called a HUD. And it's going to be a breakdown of all your expenses, closing expenses.
Okay.
Right? It's going to show you what you put down. The attorney's fee is going to be on it. Say $1,000 is probably the standard. $850 to $1,000 is what the attorney's fee is for doing this closing. So that's
Okay.
something you have to pay
So
for.
that adds to, okay, so now I'm up to 3,000 after I find my house.
Exactly.
Got it. Okay.
You have title insurance to make sure that there's no encumbrances or liens and all that. So that's an expense right there.
That's something I had to pay for too.
It's part of the closing expense. Yep.
It's all
Okay.
at closing.
So let's figure 1,000 for that one. 4. Okay.
Yeah, I'm trying to think what type.
Yeah. You
Doesn't hurt to have extra.
you
That's
never get
not
out
it.
of anything in a house for under 1,000.
I mean, there's some. I mean, you.
I think one of the biggest things is prepaid taxes.
yes,
The taxes is huge.
That's probably the biggest expense.
Like
Okay.
this can get very confusing. But let's just say, generally speaking, people pay taxes twice a year, January and July. Let's say if you're closing a property in September, that seller in July, when they still owned it, made that 6-month tax payment.
Okay.
Right?
They
that-
prepaid till next January.
you need to reimburse them for, let's just say you're closing in September, for September, October, November, December. So you need to reimburse them those months. So let's just say it's $1,000 a month as a tax. Just make it easy.
Sure.
They paid $6,000 to cover those 6 months from July to December. If you're closing in September, let's say, you need to reimburse them the $4,000.
September, October, November, December, $4,000.
So it's not like it's not going anywhere. It's paying your taxes,
Well, yeah.
but
So you don't have to make another tax payment until January of next year.
Okay. So
but that's
now,
a big number.
Yeah, that's another 4,000. Okay, so now I'm up to 8,000 extra that I wasn't really thinking about because all we go into is thinking about our
Down payment.
deposit,
Yeah,
like our down payment, right?
right.
Okay. 8,000. What else is on this HUD?
There could be a lender fee. There could be a lender fee. Like many brokers will charge points. Could be 1%, could be 2%,
Yeah,
could
you
be
guys talk about these
5%.
We've
Like it
paid
could
up
be
to like $20,000 in lender fees before.
oh, probably more than that.
Yeah.
Yeah.
That's just for thanks for finding me the bank I'm gonna go with.
Yeah.
Here's 20 grand.
Sometimes you won't see that at all because what the lender gets paid, like on their commission, is built into the rate. So sometimes that won't be there, but it could be. I would probably budget that there's going to be something there for the lender, and
Okay.
they're probably not making less than $1,000. So it's 1,000, 2, depends on the price of the house.
Okay, so I'm up to 9. Okay. What
Okay.
else?
If you're buying a house with existing oil, then like there's an oil tank at the house and the seller has filled this oil tank recently, you are going to have to buy that oil from them. I'm telling you, this is what happens.
Jeez.
So $500, they just filled the tank. It's 3/4 the way full. The attorney's going to have the owner, the seller, the owner of the current house, say how much oil is left. And you're going to give them money for that at closing. So it's $375, let's say.
Okay.
That's just one random thing that a lot of people were like, what? But that's your oil.
You want to know one of the best feelings when you buy a house is that, let's just take my example before. If you buying in September, the attorney's going to be like, you don't have to make your first payment until November. You get to skip a whole month, right?
Okay.
Like that's one of the coolest things. It's like you get to live there for like a month and a half or whatever it is for free. And
Okay.
like you usually skip a month and then that next month you make a payment. But because we're talking about other charges, it's not free because like they've advanced the money for you to buy this house, right? Like if you're putting 20% down, the bank just advanced 80%. Like nothing's free.
Right.
So like oftentimes you'll see interest charges from like your September close date up until when your payment's due in November or something like that. So that could be something depending on your rate and depending on the price of the house, or I should say, depending on the loan amount, will dictate what that number is.
And that's on the HUD as well?
Yeah.
Okay. So that's another line item of like how much-ish? Can we put it at like another 5 to 7 something? So that we're at 10,000 now?
Generally speaking, like your interest charges are very, very, very heavy in the first couple of years of the loan. Well, first good number of years of the loan. Like
Right.
it's heavily weighted towards interest. Like it's
Yeah, you're mostly paying interest. at
exactly.
first. Okay.
Like if you pay $1,000 a month, like $750 is going to interest, and it's like, nothing to principal. So like that number is going to be decent,
Okay.
but it's hard to estimate because we don't know the interest rate and the loan amount. But
Okay. I'm bumping our extra budget here to 10,000.
Yeah, 10,000 for closing costs if you're buying a $500,000 house, or really, I mean, anywhere from like 250 to 500,000. It's
I would
I'd
100% budget $10,000 for closing. Unless you're buying
least.
something very expensive or something very cheap, you're going to fall right there.
Okay.
good ballpark to live in.
Okay.
Yeah.
So down payment plus 10 to 15 grand as a buffer, a just in caser. Got it.
Yep.
Okay.
Yep.
So that's why a lot of people who are first-time home buyers, and for all the listeners out there, there's a lot of low-down loans because 20% down is a big chunk of money on any 100,000, 200, doesn't matter. It's a lot of money. So, the government has given out like a 3.5 FHA loan, Federal Housing Authority, like 3.5% down. So if you're buying a $500,000 house, that's significantly less down payment because you have all these closing costs. So, one thing to keep in mind, if you're putting less than 20% down, you're going to have something called PMI insurance. It's private mortgage insurance. It's insurance the lender is making you get on top of. You got to have homeowner insurance no matter what.
Right.
That's a given. But they're making you get basically loan insurance, right? That's how.
Because you're a
better-
newbie, pretty much.
You're putting you have less than 20% equity. They're taking
Equity,
all the risk. They're taking 96.5% of the risk,
Right.
right? Instead of
Yeah.
80% of the risk.
Exactly.
Okay.
Think
So
about that.
that's their insurance policy that you pay for that insures them that
It
you're
all gets
not going
looped
to default.
in. You don't have to make a separate payment for it. So one thing when most banks will do this, unless it's like a private or hard money loan specific stuff, is you'll have like your one monthly payment. It's principal, interest, taxes, insurance, homeowners insurance, and then PMI insurance. So like all those things will get looped into one big monthly payment you have to make to
Right.
that bank.
Okay.
So,
But something to look forward to when you do, generally speaking, there's some rules around this, but just generally speaking, when you reach that 20% mark, you can call and request to get rid of that payment, which is nice.
Yes.
Because it's probably a couple $100.
It is. That's what we did. That's
Oh,
what Joe
yeah,
did.
yeah.
We had first time home buyers. There was the PMI in there, and then eventually we were able to get rid of it, which was
Right.
nice once we had been in the house.
you have 20% equity.
Yeah.
So your house appreciated because you were making all interest payments anyways. You weren't really paying down the principal.
Nope.
But it appreciated.
Right.
And that's the beauty of real estate. It appreciated and that PMI dropped off. Because
Got
the
it.
bank is saying, okay, the house is now worth this. That bumps your equity up to 20% or more.
Right.
So we don't need that PMI anymore.
Okay. So now I'm sitting with my attorney. He's got all these charges. I'm writing him a check for my closing costs, and I sign something, I assume. Tons of papers,
A lot of
actually.
paperwork.
And then who gives me my keys? What happens next?
The realtor does all that for you.
So
Your realtor will coordinate the keys with the other realtor.
okay. So when I walk out of my attorney's office, having signed my life away, now what?
A lot of times before you even step foot in that attorney's office, it's closing day. Congratulations, you made it all the way. You haven't seen, so you did your inspections, and now 20, 30 days have passed since the closing, because you don't go to the appraisal. You only go to the inspection. So you haven't stepped foot in this house since when you first saw it on your walkthrough, then you made your offer, and then you went and you were there during inspections. But now 20 days, 30 days have passed. You're like, house still standing? Anything changed in it? So that's why a lot of times it's good practice to do a final walkthrough. This is the night before your closing or the day of. A lot of times the day of your closing. Closings will be set between 12 and 1 o'clock or any time in the afternoon. The realtor will coordinate a final walkthrough with you. So you go back to the house, make sure everything it is what you thought it is. Nothing's fallen down.
Yeah.
We've had plenty of deals where things aren't as they should be. And you have to then negotiate last minute at the closing table.
Oof.
We're not going to go there, but that's why you do a final walkthrough. And a lot of times during that final walkthrough, you go right from there to your attorney's office and you're like, hey, everything's good to go. Let's start signing the paperwork. And you would have already collected the keys at that time. A lot of times, if it's a pretty smooth transaction.
Right.
Sometimes we're like, no, you're not touching the keys until after I get my money for the sale. But a lot of times it's like, take the keys, and then because you're going to go right back to the house afterwards.
Right. Now you want it.
Now you want it. Now you want it. Yeah. So final walkthrough is huge.
Okay.
Very important.
Got it. Final walkthrough.
We've
sign
been
all
in
the
final
papers.
walkthroughs. Basements have been flooded. Oil's leaking. Gas is turned off. Heat's off. Electricity's off. It's like, what the hell, man? What's
Yeah.
going on here? Like, I'm not closing. Like, figure this out real quick. A lot of times.
Okay. Right. Because I could see people are selling and they're like, meh.
Let it go. Yeah.
Okay. Got it.
Things like lawn overgrown or like maybe a little bit of trash or like nails in the wall. Like,
Yeah.
what
You
are
don't want
you
to.
don't want to nitpick them too much
you
because
don't.
like
Yeah.
maybe they forgot to patch a little. They were hanging a picture and they didn't patch it up afterwards. Like,
We're talking about like if you walk in there and there's a big, brown circle on the ceiling because there's a water leak. Like there's
a hole in a
We're talking
wall,
about
like big-
serious stuff. But
Okay.
so.
that's important to do.
Okay. So, guys, considering I'm a producer for you, I think that should be a wrap for this episode, but I want to come back next episode and talk all lending, all investing, all where do you find the people to actually do your real estate investing. I own my own house now, but now I have the bug, like you mentioned all the time, Mike. I want to do more. I want to own more. I want people to pay me. I want to have what you guys have.
Okay.
I have more questions.
So you're talking about you want to walk through the process of buying an investment property.
Yeah.
Okay.
And you guys talk about your private investors. Who are they? They sound like mystery people to me. So I want to know all about them, and I want to know all about like what the process is, and then where I should start based on past episodes. I feel like I should start with like a 1 to 2 family. Ryan says run by the room. I know there's debate there, but I want to know where I should start with that, and then how to continue to scale in like a step-by-step basis.
Okay, let's do it.
Fair.
Let's set it up.
Done. Consider
Awesome.
it done.
I'm inviting myself back.
Let's do it.
Awesome. Yeah.
Thank you for the questions. I think that was really helpful for a lot of the listeners.
Yeah. Do you feel like, serious question, like, do you feel like you could confidently go like out of this room right
What's
now?
the first step?
And
Talk
and
to
do it?
Mike.
Talk to me. No, I'm
Talk
just
to
kidding.
Mike,
Talk
and then
any
Mike's going to
realtor.
tell me to
Yeah.
talk to Ryan.
Exactly.
And then I'm going to get pre-approved, and then I'm going to know what I can afford. Then I'm going to tell Mike what I can afford, and then I'm going to be on the MLS. I'm going to find my house, pick my house, sign all the paperwork, have all my extra money, up to $10,000 ready to go for closing costs, and then I'll have a house. Easy
Wow.
peasy.
Just like that.
That was impressive.
Easy
very
That was
good.
a great recap.
Good
Nice.
teaching.
Good.
Solid.
Well, thank you all for listening today. Thank you, Ashley, from Capture the Concept, our awesome
Appreciate it,
producers
yeah.
here, for grilling us on the questions. I think that was really
Good
helpful.
times.
Thanks for having me.
If you liked what you heard today, be sure to like, subscribe. We're on Facebook, Instagram,
YouTube.
YouTube, most
Big one.
importantly.
Yep.
I always forget YouTube, so thank you for the look. And just remember, sky's the limit. Dive deep and invest in how you want to live.
See you next
week.
time.